Hi traders, welcome back to the channel. I'm hoping to make a pretty quick video today. I still get questions about the trailing drawdown rule, specifically when it comes to Apex, which is one of the few companies that still has a trailing drawdown. Most other companies have end of day drawdowns, which I do think are better for the traders. However, Apex, this is one of the rules. They really have a lot of very flexible rules, like there's no consistency rule when evaluations, there's no position scaling, no daily loss limit, etc. But this is the one rule that you really should pay attention to, and I want to explain it in this quick video to make sure you really understand it. I've explained it in other videos in the past too, and I compared it to the end of day drawdown. You can look for those on my channel. And right now, Apex is offering 80% off and 1 day passing. You can get that by using the code PABT down in the link in the descriptions below. Get yourself this deal going on right now. And so let's just go very quickly through an example so you understand how this works. Let's assume we're going to be using a $50,000 account, profit target of $3,000. Our trailing drawdown is going to be $2,500. So that means our maximum trailing drawdown or liquidation is $47,500. So we're starting right off here at 0 when we buy the account. And let's say on day 1, we put up a trade and we close it here for a profit of $1,000. That means that our liquidation, just like our account balance went up $1,000, our liquidation or maximum drawdown is also going to go up $1,000. The main thing to know with this rule is it will always follow your maximum account balance, whether that is realized or unrealized gains. So the very important key with this, as we're going to see in the next one, is you don't want to give back profits. You want to secure profits as quickly or as often as possible. Okay, let's say on day 2, we open up another trade, and at one point we're at $500 in profits here, but this trade is still open. This is unrealized gains. So that means our unrealized open balance is going to hit $51,500. That means our maximum trailing drawdown is going to go up to $49,000 because it is always going to be trailing by $2,500 in this account, the maximum account equity. But now let's say we keep this trade open and it start coming against us and we don't close it until our balance goes back down to $50,500. That means we had a realized loss of $500. Okay, so there. So I just changed it. It should actually say loss. So that means our balance is now $50,500. We had a loss of $500 from our balance of the previous day. We have closed all positions. And now the maximum drawdown is not going to move because remember, the liquidation price never goes down. It only trails up. Okay, so in this case, we can see that now our buffer has gone from $2,500 to only $1,500 in buffer now between our balance and our liquidation. Let's say on day 3, we have a good trade and our balance goes up. We close out the day at a maximum balance of $51,200. That means we made a $700 profit. So now the maximum drawdown is going to stay the same. Why is this? Well, because we have not made a new equity all-time high. We're still $300 below the maximum equity that we had the day before. So the maximum drawdown is still going to stay there. But now our buffer has gone up to $2,200 now. Okay. Now, day 4, we open up a trade and we hit a runner that goes up, and we're at an unrealized profit of $1,300. So that means now our account balance is at $52,500. As soon as this happens, our maximum drawdown is now going to go up to $50,000. Why is that? Well, because we're now $1,000 over what our previous equity high was. So as soon as our maximum account balance went up $1,000, our trailing drawdown went up $1,000 as well. Remember, it's always a $2,500 trail. So that means now we had a moment of $2,500 maximum drawdown on our equity high, but we do not close the trade. We don't secure this profits, and the whole thing comes down, and we end up holding all the way down, and we close the trade when the balance gets back to what we had on day 2. We close out the trade at $50,500 in balance. That means we've now had a loss from the previous day's close of $700, and now our maximum drawdown is going to stay at $50,000. So now we only have $500 of buffer between our account balance and our liquidation. Okay, so pretty much this is an example of how you can see that the max drawdown is trailing our maximum account equity, whether that is realized or unrealized gains. So it's very important that we do not hold on trades that are coming back against us, because the trailing drawdown is never going to go down. So very important not to give back profits. And now to finish, just a quick note on some basic rules when it comes to Apex. When it comes, Apex offers Rhythmic or Tradovate TradingView accounts. For Rhythmic accounts, during the evaluation, drawdown will stop trailing once the trailing stop hits the profit target. This means once your threshold balance reaches your profit goal, not your account balance, the drawdown stops trailing. So for example, in a $50,000 account like we've talking here, once the auto liquidation threshold value gets up to $53,000, drawdown will stop trailing. Okay, so that means as soon as my account balance will hit the profit target of $53,000 on this account, the maximum drawdown is going to lock at $50,500. So that's the $2,500 buffer, and is not going to move from that point at all anymore. This is for Rhythmic accounts. Tradovate, it will not stop trailing, okay? So with Tradovate, it will be the same rule. There will always going to be a $2,500 trailing threshold from your maximum account equity, whether that is realized or unrealized gains. In the funded accounts, this rule changes, and your trail will stop when you have exceeded the risk allotment by $100. So that means if you're allowed a $2,500 trail in a $50,000 account, as soon as your liquidation starts off at $47,500. As soon as that goes up to $50,000 plus $100, that means as soon as your account balance reaches $52,600, your liquidation is going to be locked in at $50,100, and is not going to move up from there. So it's going to stay up at that point and is not going to move further anymore. Okay, and that's why when you're funded, as soon as you pass, in this case, if you're on a 50,000 account, as soon as your account equity goes over 52,600, then you want to just keep building that buffer, because you know that your liquidation is never going to go above 50,100 in the case of this account. Okay, I hope this video has been insightful and you understand how this trailing rule works better. Again, if you want to get the maximum discount right now, 80% plus 1 day pass-in as soon as you hit your profit target, make sure to use code PABT down in the link in the description or through my website. Okay, take care, and I'll see you all in the next video.